We're joined by Geetu Sharma, AlphasFuture founder and investment manager. Geetu, you've been hearing kind of how we've been looking at the trajectory of where the Fed has moved over this last year. What are you looking to as we await those comments from Jay Powell this afternoon?
And I think in your opening comments, you actually said it all. So yeah, the Fed is really the driver in the markets right now. And there is a lot of uncertainty because, as you said, the economic data is quite mixed. On one hand, we had lower jobs growth last month, but we still have strong job openings, and the economic GDP growth is still pretty good. We also had great sales in the Thanksgiving weekend. So it's not so clear that whether the economy is slowing fast enough to satisfy the Fed. And so I think it's very likely that the Fed will stay hawkish. The market seems to be already pricing in the 50 bips rate hike. So I don't think the Fed is going to change that market view much by either being too dovish. So it's likely that they're going to err on the side of caution.
And Geetu, when you have a data-dependent Fed, how much is enough data? Because when we were looking at some of the notes from the FOMC meetings, some of them still weren't convinced that they'd seen enough data yet to even go as low as 50. What's your take on perhaps what could be that tipping point?
I think there are a number of factors which are still uncertain. And, if you look at it, the Fed wants to get to 5%, around 5%. We expect that to happen somewhere around first quarter next year. After that, they will pause potentially and see how the economy progresses, how inflation progresses. And many economists see inflation rate only coming down to 3 to 4% by the end of next year. So that does not really signal, that's still far away from Fed's 2% target rate. So even if the Fed then pauses after getting to 5%, we may not see a pivot straight away. We may actually stay at those high levels through 2023. So I think a pivot is still very far away, unless, of course, something breaks down in the economy, or if we have a sharp breakdown or a financial instability event, that could really drive a pivot. But until then, I think we are in this slow grind lower. It's a soft landing right now. It's not a hard landing right now.
Geetu, on that point, though, you've said in your notes that you think that the market is simply too complacent when it comes to inflation as well as the rate cycle. In terms of messaging, what does Jay Powell need to say today to set the market expectations where you think it should be?
So I think Fed is going to reinforce that it needs to be in restrictive territory. And given that the economy is not slowing fast enough, they will say we're not there yet. And that's my expectation. But I think that will keep the door open for them to change their stance if the data moves in their favor. So given that the market is already talking about a pause, a pivot, it's complacent in that regard, expecting inflation to come down, expecting economy to head into a recession. And, and 10-year yield is going down as well. It's 30 bips or so below 4%. So in a way, the financial conditions have eased in the last 2 months. October, November, we have seen markets go up. That all plays. I don't think the Fed is liking that. It all plays into what the Fed doesn't want. So it's going to be an interesting conference today, I think.
And Geetu, just very quickly here, in terms of a recession, we're now seeing some estimates putting it perhaps in the second quarter, moving it further into 2023. Expectations for how deep and how prolonged you think it might be?
So I really don't have a forecast for recession myself, but I think there is a chance that, given how strong the U.S. consumer is, that and given that wages are still growing and job market is very strong. I don't know if recession is coming soon. I also think that China reopening, if whenever that happens in 23, could actually be very positive for the global economies, for global demand, and possibly it might also support or push up inflation. So there are a lot of uncertainties around that, and if we do get a resolution to the Ukraine war, that will give a boost to global consumption and demand again. So some of these factors have been weighing on the markets and economies for a while, but they could turn in 23 and could put recession outlook further out.
True indeed. Well, great having you on for your insights, Geetu Sharma, AlphasFuture founder and investment manager. Thanks so much.